Crypto market is going sideways right now. So I think we've had some major changes when it comes to Bitcoin recently. And I'm going to talk about these, how I plan to trade for the second half of 2023. Recent price action for most assets has been slow, sideways, a few moves up and down, but nothing that's been that fun to trade. And that's really reflective in the price action. And you take a look, for momentum traders like me, this is where it was very easy to make quite a lot of money. Lots of easy trade opportunities, but the more recent price action, you can see it's a lot more choppy. It's a slow bleed down. That's actually not the worst for momentum, but even that has started to go sideways now. So the most significant thing I've been watching recently is the 100-day moving average. Now you take a look, we can see this level has been extremely significant for a while now. Just observe key resistance, every single interaction here. Then the first break was a huge key breakout. The first retest was our greatest support. And now here we're seeing the next retest, if you will. And it's looking like we might have a break. And whether or not this level here is a breakout or a fake out is going to determine the next 6 months. So I think we're at a really pivotal moment right now. Now, the last trade I took myself was a few shorts on this move down. I actually have taken hardly any trades in this range here. And unfortunately, I've been away for medical reasons, so I couldn't catch this beautiful short over here. So yeah, I wanted to point this out, key level I'm paying attention to. Now let's do our high time frame analysis, starting with the 1 week. So key resistance, 30K, and then key support, we've got 25K over here. Without a doubt, the two most important levels on the chart from a high time frame perspective. And it's reasonable to assume the price will slowly make its way down to test the 25K. Even just looking at this high time frame chart, the most probable level that we're going to test is here at the 25K. And you'll see there's a few confluent reasons that that's going to happen. And I'm also going to add specific trades, both short term and long term, that we can take around this 25K level. So going down onto the 1 day, we now see this 100 moving average. I'm going to isolate it because it's the most significant. Outside of that, we've got resistance here around 29K, psychological round number, and it's hard to form any clear levels given how much chop we had around here. So we'll softly mark out the 29K level there. And it's actually easier to zoom in onto the 4 hour and mark out key resistance here repeatedly about 27.4. And this was our key breakdown level that we were watching for a while as well. And then for support, I'd go here, grab around 26.6. So price was ranging between here. We got a breakdown, and then what we can see here is a retest happening. And given we had this aggressive wick come down here, price is somewhat holding this soft level. So this gives us a few different options for trades. The macro environment is bearish. You take a look at the market structure, and on the 1 week, it looks like a range. Here on the 1 day, we're seeing a downtrend starting to form and continue. And right now, the most logical explanation is for this to come back down and make the new low there. We always assume continuation. Then taking trades with the trend means shorts are going to be higher probability. That doesn't necessarily mean higher reward, but definitely means higher probability. And max reward, we're looking at about 25K. Now, normally when we have levels this significant, price will either bounce above it or it'll go and wick a fair bit below it. So they can be quite tricky to play. So our two options to trade towards this level here, where we think price is going to go, given high time frame trend, that given it's a key structural level, is number one, a high risk retest. So we've got this retest right here. You can start accumulating your short position over here, set your invalidation wherever you like, top of this range, middle of this range, and target down towards the 25K level, and then manage your position once you enter it. That doesn't mean you enter here, set your stop loss, and then exit here. It means you enter here and then you continually evaluate as the price develops towards this level and see how you want to play that position. That's one play. And we've also got the breakdown over here where we just wait for a breakdown of this level. I really like this breakdown play because it's clean. We've got confluent data points, 2 over here. We've got high time frame structure in our favor. And also, I've spoken about this before, we've got a lot of empty space. When you get empty space like this, that means no recent price data. You get much cleaner breakdowns and breakups. And I can show you an example of that. We go over to the 1 day over here. Notice over here, there's all this empty space. When there's empty space, we get big aggressive moves up. Similarly, a lot less so, but we do have quite a bit of empty space here where the price can go down and drop towards. So that's what I'm looking at on the bearish side, short term. But there's also a big bullish opportunity coming as well that I'll talk about. We zoom out to the 1 day and we'll really clean up this chart. Actually, we can even go to the 1 week for this. So this was a really key important breakout for us because it represented a shift in market structure, and price has really come up and tested supply over here. All of these are previously areas where buyers stepped in and there wasn't a lot of demand. And then here, big breakdown, tested it as a resistance, and now we've got a second test as a resistance. So the 30k level has been tested and people sold off at that level. So the next big decision is going to happen here at 25k, where either buyers are going to step in and then price is going to bounce back up and retest the 30k level. We don't know if it'll break. Just because it bounces doesn't mean it'll break. We could easily see price action where price comes down to the 25k, bounces, creates a new lower high, then comes back down, testing either this level or this level, and then continues up afterwards, or very possible. But we don't need to predict it. We just need to find scenarios where we can make money. So scenario 1, the long position here. So you take a long over here, and you're looking at upside reward of around 22%. Now, the macro environment is not in our favor. Generally, consensus is extremely bearish across the board in most metrics. Bringing in Fibonacci's here, we have actually got a really nice test of the 382 level. So that normally looks great to me. And that actually increases our potential upside reward. Why? Because if price goes up and only bounces down to the 382, that's normally very bullish. That means this 6 months over here where price has gone up, when it comes back down, buyers step in after only a 38.2% retracement. That means demand is still strong. And if we bounce from this level and buyers did not let the price step below this, they're probably going to let the price go above this. So getting a bounce at this level increases our reward potential. It means we're likely to break the next resistance. A confluent reason to look for a long here. Now remember, this doesn't actually increase the probability of us bouncing. What it means is if we bounce, scenario is even better. So what this does is increase our potential reward. Then a trick I've learned from a good trader friend of mine is when you take big macro positions like this, especially at key structural levels, what you can do, and this is actually something I'm testing in my own trading systems right now and planning to slowly increase position size and take it live, is reversing when I'm wrong. So I'm going to be looking for some sort of long play over here. And I think it's a low probability one that probably won't work out. But if it does, I get a lot of reward. So what I'll also prepare is a short position where I can bet on the price aggressively collapsing below this level. So wherever my stop loss gets hit, I reverse and quickly target down to the levels below. And last thing we'll do is talk about those. If you're a bull, you do not want to lose this 25k level. A bullish bias is completely invalidated. Once we lose that level, this is the price action we're looking at. We've got key resistance at the 25k. We've got this 16k level as the apocalypse level. We've got a midpoint around this 20k level. And all of our trading is really going to happen between these 3 levels. When we initially break this 25k level, price is going to magnet down towards 20k. We'll be taking shorts in that direction. When we hit this 20k level, I probably won't be looking for longs. I'll just wait out, see how the price action breaks out. If we break below it, I'll look for a play down to here. At this extremity here, I may look for some long plays as well. These are macro plays. That's everything I'm looking at right now. And yeah, that's my update today.